Welcome back to Alpha Recap, your after-hours market rundown from stockalpha.ai. We're coming to you after the close, and as always, if you have questions, you can reach us at stockalpha.ai. Ready to dig in?
Absolutely. Today felt like a classic pre-earnings session. Lots of positioning, some big winners, and a few clear weak spots.
Right. Quick headline first. The broad market finished the day up, with the S&P 500 closing up about 0.6%. The tech-heavy Nasdaq 100 shot ahead, finishing up about 1.3%. Meanwhile, small caps lagged. The Russell 2000 was down about 0.2%.
So you had a very narrow leadership day. Big tech and AI names led, smaller and more cyclical stocks faded. That set the tone across sectors.
Yeah, money seemed to gravitate toward what people think of as safe ways to own growth. Large cap tech and a few industrials. I mean, when you step back and look at this, it was risk on in the usual places.
Which makes sense with earnings looming. Portfolio managers trimmed small cap exposure and concentrated bets where conviction was highest.
Let's talk drivers. Alphabet was a clear headline mover. Shares jumped after confidence-tinged commentary and positive notes on ads and AI monetization. That helped the whole mega-cap complex.
And beyond the usual suspects, some niche players got attention too. Poet, a smaller tech supplier tied to AI interconnects, spiked on partnership news. It was, honestly, a bit of a magnet for speculative AI flows today.
Yeah, that was a fun call-out. But not everything was rosy. Intel showed marked weakness after concerns about execution and a tougher chip cycle outlook. That dragged on the broader semiconductor conversation.
Delta did well despite higher fuel costs. It reported record revenues that reassured investors on demand. So some travel names balanced margin pressure with top-line resilience.
Marriott and Insperity were getting dissected in analyst notes. Coupang and Magnera drew attention for valuation and structural reads. Mixed moves across the board, depending on margins and guidance.
Short reactions.
Big divergence today.
Narrow leadership.
Watch small caps.
Let's unpack the sectors a bit. Technology and communication services were the clear winners. AI headlines, improving ad narratives for big platforms, and positive results chatter pushed those names higher.
Communication was mixed, though. Legacy media lagged, while digital ad beneficiaries and platform providers outperformed. So it wasn't a uniform rally within the group.
Consumer and retail showed momentum in select names, especially high-end or digitally advantaged retailers. Bricks and mortar value plays were getting left behind.
Industrials and materials picked up steam on project announcements and supply chain shifts. That's the kind of rotation you'd expect when investors look beyond pure software growth into more cyclical, cap-intensive areas.
Energy was mixed. Demand was elevated with the heat wave, but operational stresses and input costs capped upside. Not a clean story there.
Utilities faced policy and project headwinds, and real estate was mostly flat to a touch negative, as investors balanced rate sensitivity against local demand.
Financials were rather muted. Banks and insurers moved in a narrow range, stronger loan commentary offset by margin pressure. Nothing revolutionary.
Crypto and payment infrastructure reacted to regulatory chatter. Talk about central bank digital currency constraints sparked debate, but tokenization and private market infrastructure kept pockets of enthusiasm alive.
So what really stands out here is the macro overlay. Inflation data is still mixed. Goods are clearly disinflating, but services have been sticky. That's keeping the Fed in a data-dependent posture.
Right. Strategists broadly expect the Fed to remain patient. Not an immediate cut, not more tightening either. That dynamic supports higher multiples for long-duration growth names, while cyclical and rate-sensitive areas stay under pressure.
Yields and the dollar were mostly range-bound, with a little upward pressure as risk appetite rose. A modestly stronger dollar and slightly higher yields act as a headwind for commodity and rate-sensitive sectors. Again, helping explain the rotation.
Okay, technical context and market breadth. Breadth was uneven. Mega caps lifted the averages, while mid and small caps didn't participate. In plain English, a few big winners carried the day, while many stocks didn't move much.
That's important because narrow breadth can hide risk. If only a handful of names are driving the index, the market can look healthy on the surface, but be fragile underneath.
Exactly. Momentum indicators favored growth and the biggest names. But the divergence between the tech index and small caps suggests a broader advance would need confirmation from cyclicals and small cap participation.
Historical note. We've seen this before ahead of earnings. Investors concentrate capital into perceived winners and trim beta. Those stretches can persist, but they often end if earnings or macro prints disappoint.
So what should listeners be watching next session? First, earnings kickoff. More corporate reports and management commentary will dominate. Revenue trends, margin talk, and forward guidance will be the focus, especially for names absorbing cost pressures like airlines and retailers.
Second, any fresh macro prints or Fed remarks could change the tone quickly. Services inflation and wage dynamics are key to the Fed's decision path.
Third, breadth confirmation. Watch small cap activity and participation in financials, industrials, and materials. If those sectors start to join the rally, the market's advance looks more durable.
And fourth, technical risk levels. Traders will be watching support zones for the S&P and the tech index and whether small caps can reclaim recent resistance. Failure there keeps the market in a narrow leadership regime.
Quick recap. Alphabet's upbeat tone and AI headlines powered tech. QQQ outperformed. Small caps lagged. Intel disappointed. Delta surprised on revenue resilience. And niche AI suppliers like Poet drew speculative flows. Overall, a narrow rally ahead of earnings.
Bottom line, data suggests momentum favored large cap growth for now, but broader participation will be necessary for a sustained rally. Analysts note the Fed remains data dependent, and momentum could shift with upcoming reports.
Important reminder, this is informational only. We're not telling anyone to buy, sell, or hold anything. Analysts' note and data suggest are the right frame here.
Final takeaways?
1. Markets closed with a narrow leadership pattern. Big tech led while small caps lagged. 2. Earnings season is the main near-term catalyst. Revenue and margin commentary will matter. 3. Watch breadth and small cap participation for confirmation of any broader advance.
And 4. Keep an eye on services inflation and any Fed commentary. Those macro signals will influence rates, yields, and sector rotation.
All right, that's it for today. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. See you tomorrow after the close for the next Alpha Recap.